With the crypto market having crashed over the last 48 hours, we saw Polygon Matic down over 30% just in the span of 2 days. Now that we are trying to see some recovery with Matic up about 18% today, a lot of people are asking the question, well, is the crash over? So in today's video, we're going to focus in directly on Polygon Matic now that it's been about a week, and I'm going to give you guys an updated version of what I am looking for from Matic and how I am expecting this thing to go, and also, of course, if I think that this crash is over and what decides if this crash is over. Okay, so first and foremost, let's go ahead and let's talk about what we've been looking at from Matic, and let's talk about some targets, goals, and things that we need to be on the lookout for that will give us a good idea of what to expect over the next couple days and the next couple weeks. Well, in the last video, I explained to you guys that I was only focused on our breakdown targets from this macro ascending wedge in which we were in realistically from July to about December of last year. Now, what we can see is that as we interacted with this wedge, we had multiple points in which we touched the bottom side as support. Now, what's interesting about these macro ascending wedges is that when you break to the downside of them, your previous touches on this ascending level of support then become your breakdown targets. Those become the points in which you are extremely likely to revisit and look to establish support on. It was clear as day here, right? We broke to the downside. As soon as we broke it right here, I went down and I said, when was the last time we touched support? I came all the way back down to this point. I said, okay, it was right here, and I drew this horizontal line. And what do you know? The price comes right down to this level and then uses that as support to retest that previous level of support, establish it as resistance, and eventually get rejected to the downside. So the moment in which we did touch this level, it confirmed that these are now our breakdown targets. And what we can see is that over the last 48 hours, we did lose breakdown targets number 2 and number 3. So what that means is that at this point, we are in, the window down to price target number 4 is open. The window down to 62 cents is now open. So we really need to figure out what we need to be looking for to decide if we are looking at the possibility of Matic crashing another 30 to 35%. So personally, what I'm expecting is that there is no way at all for me to predict whether or not this crash is over. The reason being is because the market seems to be bracing for whatever news is going to come out tomorrow on Wednesday from the CPI data, and that as that does come out, that is going to have the greatest effect on the market, and it is going to be the deciding factor of whether or not this big correction to the downside is over or not. I do believe that if CPI data comes back better than expected, then we definitely could look at some type of short-term bounce to the upside, but if it does come back pretty ugly, there is a very high chance we do see this correction, maybe even lower than 62 cents for Matic. So there's no way for me to be able to predict what's going to happen tomorrow, but I can prepare myself and implement a strategy in which takes advantage of any outcome of tomorrow. So that's what we're going to go over today. So my current strategy is going to be taking advantage of a long or short position dependent on how this thing moves in reaction to tomorrow's news. What I know is that this previous zone between $1.14 and $1.03 was established as support, and we can see its significance because throughout the dailies for about 5 days we bounced back and forth between these two levels. And so considering the fact that it was established as a zone of significance, it means that as we do go back up towards it, we can expect that it will be interacted with as resistance. Now, that also does work in with the fact that as we do establish these as breakdown targets, once we lose them, they then usually get established as resistance, similar to what we saw here. We lost it, we backtested, established as resistance, and got rejected. So what I know is that as tomorrow's news does come out, if the market starts to really regain some ground, and Bitcoin, which leads this market, does start to gain some ground, Matic will too. But I personally will not get too excited about Matic and enter into a long position until we are capable of re-clearing this zone and at least setting this new short-term higher high, right? If we can get back above about 114 and hold this level of support, at that point I would then start to look to take on a long trade, expecting that we will revisit breakdown target number 1, which looks at about $1.50, which could be an absolutely fantastic trade of up to 25%. Because as we do start to revisit the upside, these become our zones of significance. So if we clear one, likelihood is we're going to retest the next one. So what I'm going to be doing is that if tomorrow does go well, again, I will start to look for us to clear 114. If we clear 114 and hold it, I'm going to enter into a long trade, establish a stop loss right under $1, probably around 98 cents or so, with the price target of the, with the expectation that we could very possibly come to revisit up around $1.45 to $1.50. cents. That is my strategy in the bullish sense. In the bearish sense, what I'm going to be preparing to do is that since we are now retesting towards the upside, I am going to be under the expectation that we are going to see some type of resistance. We have to, right? There's resistance from this trend line here. There's resistance from our zone of significance here. If we go ahead and we just actually clear this chart, one thing you can see, and draw on our Fibonacci as well, boom, swing high to swing low, or swing low to swing high. You can also see that right around $1.12, we have that 786 box, which is also going to now act as resistance now that we've lost it. All of those levels will act as resistance, and if we do see bad news tomorrow, there is about, in my opinion, 90 to 95% chance that we do use that resistance to get corrected back down towards 62 cents, or our breakdown target number 4. So for that reason, what I'm going to go ahead and do is that if we do get rejected, I'm going to be waiting for the clearing of this previous level of support around 78 to 79 cents, or the previous low that we set yesterday. If the price does break down below that point and set the lower low, that is a very strong sign that we will come to revisit what I expect to be 62 to 65 cents. And from there, I will be taking on a 2 to 3x leverage, very small leverage, nothing too risky in this volatile market. And I'm going to be shorting Matic all the way down to 62 cents to take advantage of what could possibly be a gain on 20% with 2 to 3x leverage. It could be somewhere between 40, 50, and 60% in gains, as I do expect that this is the gap in which we will clear if we do lose that previous point of support around 79 to 78 cents. So overall, it doesn't really matter to me realistically where this market does go. I'm just more focused on implementing strategies in which I can see gains no matter where it goes. So as a quick recap, what I'm looking for is the clearing of 114 to 115 and the holding of support. If we do that, I will be establishing a stop loss around 98 cents with the expectation of taking on a long trade up towards $1.50 to $1.45 as we come to retest this previous level of significance. If the market doesn't do that and we do get rejected to the downside off of bad news, once we do lose 78 cents, I will be taking on a short trade down to about 62 cents on a small amount of 2 to 3x leverage in order to maximize some gains, in which I will then use to accumulate Matic as we do start to get more bullish structure. Please do understand, leverage is extremely risky. This market is very volatile, and I am taking a big risk by even thinking about applying leverage in a market that is doing things like this. That's my current strategy, and I do really heavily advise you to do a lot of research before even considering trading or even trading with leverage in general. But for me, that's my game plan, and I wanted to kind of implement the thought into you that it's not necessarily about what this market does, it's about having the right strategy to react to it. We can't control the CPI data tomorrow, but we can control our actions and response, and those actions and response are what generally will make a good trader versus a bad trader. So overall, that's my opinion on what's all going on, and that's my current game plan. If you did enjoy today's video, of course, you can always let me know simply by smashing that like button and subscribing to the channel if you are new, and I will see you all next time. Peace.